Hello, good afternoon, and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, markets trading almost at the day's highest point is what we're seeing. Nifty 25,232 is what the Nifty 50 is trading at. 0.7% of gain is what we're seeing coming in for the Nifty 50. Benchmark indices like sensex also managing to hold on to similar levels of gain, almost 0.8% of gain for the sensex as well. Broader end of the markets, that is also doing well. 0.3% of gain for the Nifty mid cap, that's continuing. Nifty small cap also managing to hold on to gains in today's trading session as well. So yes, Nifty mid and small cap also seeing good gains. Nifty bank also among the good gainers in today's trading session. All the sectors are trading in the green except for the realty, which was a bit under pressure. Nifty realty, the last time I checked, it was down almost 2/10 to 0.3%. So that is something that we'll be watching out for. But on that note, let's get started with the show for today. This is the show where we solve all your stock-related queries, and to do just that, today we have Ruchit Jain of Motilal Oswal Financial Services joining in with us, as well as Astha Jain of Securities to answer all your stock-related queries. Ruchit as well as Astha, good afternoon, and thank you so much for joining in with us. Ruchit, what are the levels that one should be keeping an eye out on in terms of the markets? And given that tomorrow's monthly expiry, could we expect a beat of a volatility and a fall for the current levels for the Nifty and the Sensex?
Yeah, hi, very good afternoon. Well, we can clearly see that the broader trend for the markets is strong because whatever dips we are getting, even yesterday's trading session, we saw some good dip from the opening highs, but those dips are getting bought into. And the good thing is that the broader market breadth still remains quite strong. So we believe that on the high side, 25,300 would be one level to watch out for as a resistance. And once that is surpassed, I think we should head towards 25,450 to 500 very soon. Whereas on the lower side, 25,000 to 24,900 would be the immediate support zone. So I think it's a kind of market where stock picking would give you better trading opportunities. But yes, on the index front, it remains a buy and dip market, and any dip towards the supports should be bought into.
Okay. On that note, let's get started with the queries for today. We have Gaurang, who's writing to us from Nagpur. 500 shares of BPCL is what he's holding at a price of 304 rupees per share. Wants to know the outlook of the stock and wants to know if he should continue to hold or look to exit. 304 is what they bought it at, making some bit of a profit right now. Astha, your view coming in for a BPCL. What are you watching out for now? Given, we've seen so much volatility coming in crude as well. So what should we keep an eye out on in terms of factors for BPCL?
Hi, good afternoon to all of you. So yes, there are certain factors which we really need to look after if we talk about BPSL. First of all, would like to give my strategy. This is hold from my side with a price target of 355. Now the basis on which I'm giving a hold is, first of all, there's strong refining performance, there's strategic expansion plans which we are seeing, and with the Mozambique plan and the city gas distribution business. Definitely, this company has certain plans which can really lead to strong financial performance going ahead. So on the basis of all these, I believe that BPCL is well placed to post some more gains from here. Hence, we are recommending hold on this counter with an initial price target of somewhere at around 350 to 355.
350, 355 is the target that you all are giving. Ruchit, on the charts and technicals, are the targets at similar levels, short-term and long-term targets? And you think the viewers should hold the stock then?
So last 2 months, we have seen some sideways action in the stock where 300 to 335, this has been the trading range. But if you look at the broader trend, I think the broader trend still remains positive, and hence this entire consolidation seems to more of a time-wise correction within an uptrend. So I think since the buying price is around 304 and the support is at 300, the risk-reward ratio is definitely favorable to hold on the long positions. And what you've seen in last couple of days, that the crude oil prices have also dipped sharply. So definitely being an inverse correlation. So I think going ahead, once this time-wise correction is over, the stock should see a resumption of the uptrend for potential targets towards 350 to 360 zone. Similar, I think, what Astha told. So yes, should hold on, keep a stop loss below 295 on your existing long positions, and review once you get the stock around 350 to 360 zone.
Okay, keep an eye on those levels over there. Let's move on to the next query for today. We have Shankar Das, who's writing to us from Hyderabad, holding 200 shares of M&M. This is at a price of 2,647 rupees per share. Wants to know if he should continue to hold or book out his profits. Astha, M&M, what is the story that you see playing out here as well? Obviously, they have those, the SUV segments that they are talking about. That is expected to do well. What are we watching out for other than that? And should they continue to hold the stock?
Yes, because we are also looking about the realization growth which happens from their EV models. So we are taking it to at around 8% realization growth going forward. And in fact, this company has continuously gained market share in PV, CV, and tractors business. In fact, we are expecting the volumes in these businesses to grow at a CAGR of around 12% overall. So talking about this counter, we believe that this counter is well placed in our automobile space to show more upside from here. So we are recommending buy as well as hold. Both the strategies we are giving on this counter with a price target of 3,300 to 3,500 in the longer term.
Okay, and Ruchit, your view on the technicals?
So technically, the stock seems very strong because the stock has shown a good relative outperformance compared to sectoral move. Now, if you look at this entire corrective phase, which we had seen from the month of October 24 to recent lows in the March 25, the Nifty Auto Index had corrected sharply. Nifty Auto Index is still, I think, much below its previous all-time highs, whereas the stock Mahindra and Mahindra is quite close to its all-time highs. So clear relative outperformance compared to other stocks within the sector has been seen in Mahindra, which could continue going ahead. We expect targets somewhere around 3,480 to 3,500 in the near term. So I think it's better to hold on this outperforming name. You can expect targets around 3,500 in next couple of months.
3,500 in the next couple of months, so can look for some bit more of a profit before actually selling. That's the view coming in from our experts for today. So do hold on maybe for some bit of a time. 3,500 is on the cards. Let's move on to the next query for today. We have Sai Indranath, who's writing to us from Hyderabad. He's holding 600 shares of IEX. This is at a price of 180 rupees per share. 6 months ago is when he purchased the stock, and he's saying if he can hold it for 6 more months, wants to know the outlook coming in for the stock as well. IEX, today we have a brokerage note also that has come in right from Bernstein. They were also quite positive on the stock. So, Astha, what are we watching out for in terms of IEX levels? And would you suggest that the viewer continue to hold for some bit more of a time?
Yes, one should continue to hold for this counter with the price target of 200 to 215 at the initial levels. Now, talking about this counter, what we have seen in the quarterly result was increase in the revenue by 17%, but that was mainly due to the increase in the volume. We have seen a surge in the increase in the electricity trading volumes. And going ahead also, what management is anticipating that these volumes will continue to grow, looking after the strong electricity demand, and they are expecting it to continue to grow in the double digit if we talk about future or futuristic FY26 figures. So I think on all the spaces, I think this counter is well placed to show more gains from here. So a buy is also recommended from our side for this counter, but it should be on the dips at around 185 odd levels. But price target can be set at around 200 to 215 at the initial levels for this counter.
Okay, keep an eye on those levels over there. Ruchit, IEX on the charts and technicals, what are we watching out for? Because last 6 months, it's been quite in that range. Nothing sort of an exciting move or an up move that one has seen, right? So does it merit holding it on the charts also? Or would you say that, might as well exit the stock?
So relatively, there has been an underperformance in the stock, and what we've seen in this 4 to 6 months has been more of a consolidation within a broader range. The stock has 200 DMA support around 175, but no, the trend is not yet positive, but more of a sideways kind of thing. I think 210 to 175 is the trading range for the stock. So I would suggest to look for exit opportunities if you get some pullback move near the higher end of the range. I think there are much better opportunities available in the market where you could see some make relatively better gains than what one can see in IEX.
Okay. That's a view coming in there for IEX. Let's move on to the next query for today. This is coming from Ravi, who's writing to us from Hyderabad. He's holding 100 shares of ICICI Bank. This is at a price of 287 rupees per share. They're making a profit on this one. They've been holding it for a while. Wants to know if he should continue to hold or book out his profits. Astha, your view, is it time maybe to just take some bit of the profits and then at least get out your cost and some bit of the profit and then enjoy the remaining profits if it comes going forward?
While my idea here is to stay invested rather than booking profit at this point of a time, because we are very much optimistic on the banking space, and this being the bank which has got a very strong credit quality, very strong financials they have posted, and going ahead also we believe the kind of the franchisee this bank is having, and they are putting in various strategic initiatives in order to increase their financial performance. So my idea here is to stay invested in this counter, because we also believe that with this interest rate cut scenario, the banks are well placed to enjoy all this macro developments which are taking place. Overall, we believe that this bank is well placed to show more upside from here. So there is no need to take out profit at this point of a time. Maybe at around 1550 to 1600 odd levels can be the ideal levels where one can book partial profit, not full profits I'm recommending right now. So idea here is to stay invested in this counter with the initial price target, which can be set at around 1550 to 1600.
1515 to 1600 initial target. Do not book out your profits. That's the view coming in from Astha. Ruchit, your view also. Would you also suggest the viewer continue to hold ICICI Bank instead of booking profits?
Yes, definitely. I think if you look at if you compare the stock with other private sector heavyweights over last 1 or 2 years, then certainly it has been one of the outperforming stock. And still the broader trend continues to remain positive, or the price up moves that we're witnessing are supported by good volumes. Whereas, small corrections which are there, we are not witnessing any volume-based selling happening over there. So, and overall, the banking and the NBFC space has definitely taken the leadership since this recent low in the month of March. So I believe that you might see some in between time-wise correction or some phases of consolidation, but the overall trend remains positive. So it's better to hold on to the name, have some positional view. I think you should get some more gains in this stock.
Okay, have some positional view, could make some more gains as well. So continue holding ICICI Bank. That's a view from both our experts. But on that note, we're going to slip into a short break. But before we slip into the break, tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m. Welcome back to Your Stocks on CNBC TV18. We still have with us Ruchit Jain of Motilal Oswal Financial Services and Astha Jain of Hem Securities to answer all your stock-related queries. Keeping it going with that, the next we have a query coming in from Jagdish Kumar, who's writing to us from Bangalore. Two stocks he wants to ask us about. One is LIC. He's holding 2,000 shares of this at a price of 988 rupees per share. So he's making a loss on this one. While other one is IRCTC, 2,400 shares of IRCTC, price of 842 rupees per share. So loss here as well. He's ready to hold it for the long term. What should he be doing with both these stocks, IRCTC as well as LIC? Astha, your view coming in here for both the stocks.
So for IRCTC, I would recommend to hold because what we believe that yes, the quarterly results were a little soft due to the non-performance of catering business. But with the kind of the new trains, new circuits they have introduced, definitely the catering business will get a boost, and that's why we can see a strong or a better financial performance in the coming quarters by this counter. So idea here is to stay invested. There is no need to book loss because right now 767 is going on, and the investor has a cost price of around 820 or 840 odd levels if I remember it correctly. So better to remain invested in this counter with the initial price target somewhere at around 820 to 840 odd level, which is the cost price also. Talking about LIC is looking good to us. We are recommending hold on this counter with the initial price target of 1,045 to 1,080. Now, if we see the performance from this counter, they have taken certain strategic initiatives which are really working in track in order to improve their margins, product, as well as channels. And in fact, the increased share of non-participating in their product mix is definitely helping this counter. In fact, they are expanding the non-agency distribution business also, which I believe is a a good choice going ahead, and hence we are recommending hold on this counter with a price target of 1045 to 1080 at the initial levels.
Okay, that's a view coming in there for on the fundamental front. Technicals, Ruchit, what are you watching out for here? IRCTC seen a correction in the last 1 year specifically, right? They bought it at 842, currently at 766. And LIC, they bought it also at those higher levels only, 988. And now currently somewhere around 700 is what the stock is trading at, right? So what should they do now with both the stocks on the technical front?
So I think these are not the levels where one should think of booking losses in IRCTC. Although the stock has been a relative underperformer, but no, at least the price-wise correction seems to be behind, and the stock is going now through some time-wise corrective phase. On the high side, the major hurdle positionally would come around 840, 850. I think that's where the cost price is. So wait for the stock to come around the cost price of 840, 850, depending on how the price volume action pans out during that up move. One can take a review again over there and then decide. So as of now, continue to hold on. LIC, I think this also I would recommend to hold on because the stock has seen good volumes in the recent up move. Finally, after so long period of underperformance, we have seen started formation of high top, high bottom structure on the daily charts, which gives a potential targets around 1050. So both the stocks I would recommend to hold on, and LIC around 1050 would be good levels where you can take a review again.
Okay, keep an eye on those levels over there for LIC as well as IRCTC. Next query for today coming in from Parmeshwaran, who's writing to us from Mangalore, holding 120 shares of JK Paper at a price of 235 rupees per share. Stock is at 365. They're making a profit on this one. Wants to know if he should add more shares, exit or shift to some other paper company is what they're looking at. Also wants to know the outlook of the paper industry in the medium term. Astha, your view.
So outlook is still not very positive on this industry, but looking after the JK paper, we recommend to hold this counter with an initial price target of somewhere at around 400 to 410 odd levels. Now, yes, due to increase in the raw material cost, increase in the wood prices, we have seen the financial performance was not that very much encouraging, but they have made certain acquisitions. I think that acquisitions can be accretive in the financial performance terms to this company, and hence I would just like to wait and this counter at least for the coming quarterly results. So idea here is to stay invested till the quarterly results arrive. Meanwhile, we are setting our price target for this counter somewhere at around 400 to 410 odd levels.
Okay, that's a view coming in on the fundamental front. Wait out for the earnings before you take a call and keep an eye out on the levels also that Astha mentioned. Ruchit, what are the levels that you all are keeping an eye out on for JK Paper, and overall for the medium term is what they are looking at in terms of holding time period? So what should they do now?
So overall, the trend does not look to be that positive because what we have seen that in spite of that good rally in the broader markets over the last couple of months, the stock has not seen any kind of volume-based buying happening over there. So I believe that the stock at the most, I think, should be sideways from the range of 340 to 410, 420 on the higher side. So I would suggest to look for exit on the higher side if the stock rallies towards 410, 420 in the near term, and one can keep a stop loss below 345 on the existing long positions.
Okay, keep an eye out on the stop loss levels as well as the target also that Ruchit mentioned as well. But that was the last query for today. So thank you so much, Astha, as well as Ruchit, for joining in with us on the show as always and helping our viewers solve all the stock related queries. And viewers, thank you so much for tuning into Your Stocks. Always remember that you can send us your queries. The email ID will be flashing on the screens for you all as well. So do send us your queries. We'll solve them Monday, Wednesdays and Fridays with our experts. But the last hour of trade is still left and you have closing bell to take you through that action.